In my last video, I detailed a super easy way to avoid paying crypto taxes by holding your crypto within an I Trust Capital retirement account. This is by far and away the easiest way to avoid paying taxes on your crypto retirement, but you do lose a little bit of control over your assets. So in this video, we'll cover a second way to hold your crypto inside a retirement account. Now this method might be slightly more complicated, but arguably a better way to do it. And even though it's slightly more complicated, I'm going to walk you through all of it and detail why this is a better option. So the first thing that you're going to need to do is set up what is called a self-directed Roth IRA. There are a lot of different companies out there that offer these self-directed Roth IRAs, but the biggest thing that you need to watch out for is just to simply ensure that whichever company you go with allows for alternative assets. And keep your eyes on annual fees associated with creating or maintaining your self-directed IRA. Obviously, the lower the fees, the better you're going to be. Once you have a self-directed Roth IRA set up, you're going to go out and create an LLC, a limited liability company. Now, generally, most people create an LLC from whatever state the LLC is going to be operating out of. But with our LLC, we aren't actually going to conduct any sort of business from our LLC. Our LLC exists for the sole purpose of holding our crypto. As such, we can realistically register this LLC in pretty much any state that we want. And at this point, I should probably throw out the standard disclaimer that this is not legal or tax advice. Consult your own professionals. But generally speaking, the best places to form your LLC are either going to be in states that offer super cheap LLC formation and annual filing fee requirements, such as Arizona, Missouri, New Mexico, and a few others. Alternatively, states like Wyoming that offer pretty good privacy aspects can be beneficial. Whatever state you go with, your LLC is going to be 100% owned by your self-directed Roth IRA. You are not the owner of this LLC. Your Roth IRA is the owner of this LLC. You are simply the manager of this LLC. So it's important when you're doing your paperwork to establish the LLC that you put your IRA as the owner of this company. Once your LLC is set up that is owned by your Roth IRA, you're going to take the documents provided to you when you created your LLC and you're going to open a business checking account at the bank. This checking account is going to be created in the name of your LLC, so you're not using your name or your social security number to open this account. It's going to be opened in the name of your LLC, and you're going to be using your business EIN number to open this account. And lastly, you are going to create an email account for your LLC. You can name your email address anything you want. Just create a new email account that is separate from your personal email account and use this new account only for your LLC purposes. And lastly, we're going to sign up for an account with a crypto exchange. Coinbase, Kraken, Binance, whatever exchange you decide to use, you are going to sign up for a new account. Now, most of you probably already have an account with one or more of these exchanges. I don't care. You need to sign up for a new account. The reason being is that whatever account you already have is your personal account. You can't use your personal account for this. You need to create a new account with your business account from your LLC. You will never, ever, ever, ever use your personal stuff for this retirement account. It all has to be funneled through new accounts through your business LLC. So, go onto the exchange of your choice and hit sign up. Look for the option to create a business account. Here you're going to provide them things like your LLC name, your LLC's email address, the EIN number, etc. Once you have your business exchange account set up, you're ready to rock and roll. Now, by far and away, the hard part is over. You've got things set up. You had to create a self-directed Roth IRA, create an LLC complete with its own bank account, and create a new account with your crypto exchange of choice using your LLC's information to create that account. Now, In order to actually fund this, we're going to take money from our personal bank account and transfer it into our self-directed Roth IRA. Once it's in the self-directed Roth IRA, we're going to once again move it again, this time into our LLC's bank account. And now once it's in our LLC's bank account, we can use that bank account to buy some crypto using our new business account on whatever crypto exchange that it was that you signed up with. So we do have to move money around a couple of different times. Just make sure that you don't forget one of these steps. That way you can fully separate what is your personal funds versus what is your retirement funds. Don't get lazy. You got to do each step. But the good news is, at this point, you're done. Your LLC now owns the crypto, and your Roth IRA owns that LLC. Any future profits from this crypto will be 100% tax-free during retirement. So if Bitcoin, Ether, or whatever coin you decide to buy eventually takes off and becomes worth, I don't know, $1 million, then you won't need to pay any taxes on that $1 million when you sell your coins during retirement. Now, a couple of things to keep in mind. Many crypto exchanges allow you to stake various coins and earn interest on these coins. That should be perfectly fine. Additionally, some platforms allow you to lend the value of your cryptocurrency and earn interest on it that way. That's also generally going to be okay, but it may trigger UBIT taxes or unrelated business income tax. Once again, consult your own tax professionals. This lending of your crypto may be deemed active in nature, and this active income may be subject to that small amount of UBIT tax. So if you wanted to lend out the value of your crypto, there are several companies that allow you to do this, such as Crypto.com or Nexo. If you wanted to use these companies to earn interest on your crypto, that's fine. But once again, you're going to need to create a separate account with each of these guys that is different than your personal account that you might already have with them. So if you already have a personal account with Nexo, we are going to create a new account with Nexo, and the same rules are going to apply. We're going to create this new account using our LLC's name and our LLC's EIN number. Then we can transfer our crypto off of the exchange over to our new Nexo account. And this isn't a problem because our LLC owns both the accounts, the account for the crypto exchange and the Nexo account. Just make sure that you're not moving coins from your business LLC into some sort of a personal account or vice versa. Now, probably the biggest question is, what about external wallets? What if you're going to stake your crypto on chain? Often you need to hold that crypto in an external wallet such as MetaMask. The problem with external wallets comes from an ownership perspective. Up until now, everything that we have done has been definitively owned by your LLC, which is owned by your self-directed Roth IRA. And that's why we had to set up all these new accounts, new bank accounts, new Coinbase accounts, new accounts for everything, because we wanted to be able to show that our LLC and thus our IRA owned all of these accounts. But an external wallet doesn't really have an owner. There is no proof of ownership. When you create a MetaMask account, you don't put in your name, your social security number, or anything like that. It doesn't give you the option for that stuff. So in a case like that, how do we prove that our LLC owns this external wallet, as opposed to me personally owning that wallet? Now, I did ask my accountant, and he wasn't 100% sure, but he thought his initial thought process was that if I opened a safety deposit box at a bank in the name of my LLC, and then wrote down my crypto wallet seed phrase and stored that piece of paper inside the safety deposit box owned by my LLC, that should be sufficient to prove that my LLC owns that external wallet, and I should be good to go at that point. Once again, consult your own professionals. Now, why this isn't arguably a better way of doing things, even though it's more complicated, well, there's an age-old adage within the crypto community of not your keys, not your crypto. By holding crypto in an external wallet owned by an LLC, which is owned by your self-directed Roth IRA, you retain full custody of your crypto because you never surrendered your crypto to be held on your behalf by some third-party company. This can be important in light of various lending platforms like Celsius filing for bankruptcy. If you enjoyed this video, consider subscribing, hit the like button for the YouTube algorithm, and as always, I'll see you all again next time. Thanks.